Hey, good afternoon. This is Randy back with Home and Land Real Estate, and today I want to talk about the things that you should do before you ever go look at your first house. And I've been doing real estate now for 28 years, and this is something year in, year out that I advise people to do, and a lot of people don't do it. And I've seen a lot of people get brokenhearted because they go and look at houses and then they figure out that they are looking at too much of an expensive house or houses they just can't afford or whatever, or they can't even get a mortgage or something. So this is the 7 things you should do before you ever step foot in your first open house or ever go look at a house with a realtor. Okay, so step 1, save money. Cash is king when you're getting ready to buy a house. Now, I don't mean you have to buy a house all cash. What I mean is that you should save a significant amount of money for your down payment. The very best mortgages that you can get that will cost you the least amount of money in interest and time and effort and all that are 20% down mortgages. Can you get mortgages for less than 20% down? Yes, of course. There's lots of ways to get mortgages for even no money down. But those are more expensive mortgages. They're going to cost you more per month. The very best way to get a mortgage is with 20% down. In addition to that, you will have significant closing costs for getting a mortgage. Most people are in the range of $4,000 to $8,000 in closing costs. When you're ready to make an offer on a house eventually, the more earnest money you can put in or good faith deposit up front shows that you're more committed to the house or more serious of an offer. So that requires cash in your bank account to do that. And some ways to do that, is number 1 is to live within your means. Don't spend everything you make. Put money aside, automate it, start putting $100 to $200, $300, whatever you can afford. Automate that so it goes into a savings account specified for your down payment and your house buying expenses. Do a side gig, do DoorDash, Uber, whatever little side gigs you can come up with just to get a little extra cash here and there. Those are the 2 most important things I can think of, or the 2 best things I can think of would be live within your means, don't spend more than you make, and get a side gig. Okay, number 2 is pay attention to your credit early on. Pay attention to your credit. Annualcreditreport.com is a great resource for that. You should go pull your credit at least once a year. Look and see what's on there. Believe it or not, people have a lot of mistakes on their credit that they can get fixed ahead of time. If you wait until you're ready to get a mortgage and you find out there's a mistake on your credit report, that can sometimes take 3, 6, 12 months to repair those mistakes. So get looking ahead of time and pay attention to your credit, not just for mistakes, but also for your score. Ways to improve your credit score are to stay well within your credit limits on your credit cards. If you have a $5,000 credit limit on your credit card, don't carry more than a $500 balance. Make your minimum payments. Never miss a minimum payment. Make more than your minimum payment if you can, but never miss a payment on anything that's being reported to the credit bureaus. If you are renting, talk to your landlord about reporting to the credit bureau that you're making your rent on time. In relation to the credit score is your debt to income ratio. That's number 3 is your DTI, your debt to income ratio. And that goes along with keeping your debt low, which helps your credit score. But that's one of the most important things that lenders look at is how much of your income are you paying to different debts, your car loan and your credit card payments and whatever other debts you have. They'd like to see those numbers nice and low, below 30, 40% or less, if better, is even better. They don't want to see a lot of your monthly take-home pay going to debt. Number 4 is understand your personal affordability factor. That might be a term you hear bandied about, is the affordability factor. Things are not very affordable anymore. Every person's affordability factor is different. So it's what you can afford, what you're comfortable affording in a monthly payment. General rule of thumb is you shouldn't have a house payment more than about 25% of your take-home pay. That includes taxes and insurance. And taxes and insurance are going up a lot lately, especially insurance is really going up a lot. So make sure that you keep your affordability where you're comfortable so that as things go up after you buy a house, if your insurance goes up, your taxes go up, that you're still comfortable. Make sure you understand that things change as you go along. Life changes. You have children, you lose a job, etc. Things happen. Always try to have some money in the bank in case something happens, that you can make 3 to 6 months worth of house payments. And the best way to do that is keep your affordability down nice and low and keep saving money even after you buy a house. So number 5 is explore your mortgage options. There is a lot of mortgage options out there. There are conventional loans. There's FHA loans. There are VA loans if you've been in the military. If you're looking in the rural areas, there's USDA loans. That's just the 4 most popular types. There's lots of other things. Check into down payment assistance programs and first-time homebuyer programs. Depending on where you live and what your qualifications are, there's lots of options to help you get into a house for maybe lower down payment, maybe lower out-of-pocket costs, maybe qualify you for a loan where maybe your credit's not quite as good. That's what FHA is for, to help you qualify for a mortgage. Okay, so number 6 is get organized. Know the types of things that your lender's going to ask for. Basically, a couple months worth of pay stubs, your W-2s from last year, your tax returns from the last 2 years, proof of your rent payments, copy of your lease, copies of your bank account or availability of your bank account, have that available, list of all your debts and their minimum payments and your total that is due on those debts. Keep that stuff kind of handy, know where you can get to it, because those are the things that your lender is going to ask for. So that brings me to step number 7, which is to work with a trusted lender to get a pre-approval before you go to look at any houses. And when I say a trusted lender, I recommend you work with somebody that's recommended to you through somebody you know, whether it be your realtor or your family or somebody that you know that's had a good experience with a good lender. Don't go searching on the internet necessarily. There are a lot of options on the internet. It can get very confusing very fast, and they can promise a lot of things. Your best bet is to work with somebody that somebody from your family's worked with, a friend's worked with, that knows that they are a good lender. They're not going to do a bait and switch on you or anything like that. And that's to get your pre-approval. So you should do that. All these 7 steps should be taken before you go to step 8, which step 8 is to get a good realtor to sit down with you, talk about your needs and your wants before you go look at any houses. Get that pre-approval and make a plan for looking at houses. Work with a realtor that you trust, a realtor that's been referred to you by somebody that you know, a family member, maybe the lender you're working with, somebody that has had experience with that realtor to know that they're going to work hard on your behalf. Don't go online looking for a realtor. There are way too many realtors. There's way too many lenders online that will promise the world to you and then not deliver. So work with someone you trust in the lender and the buyer and the buyer agent world. Anyway, I hope this helped. Those are the 8 steps to go through before you go looking for houses. As always, my contact information is at the bottom. Reach out to me if you have any questions. Have a great day. Thanks for watching. Bye-bye.